Welcome to World Business. Today we look at the pressures, trends and opportunities setting the pace of the global economic agenda as industries adjust to rapid innovation and governments rethink regulatory frameworks, with investors reassessing risk and companies refining strategy. We explore the factors defining change across the sectors. In the upcoming pieces, you'll hear from our teams across the regions, breaking down the shifts shaping decisions on the ground.
Alphabet was on track to hit a historic $4 trillion market valuation on Tuesday, powered by an impressive year-long rally fueled by the Google parent's sharpened focus on artificial intelligence tools. Shares of the company were up 4.1% at $331.7 in pre-market trading, putting the company on course to breach the key milestone at the open. The surge reflects a striking reversal in sentiment toward Alphabet after some investors feared the company had lost its AI edge to OpenAI after the 2022 launch of ChatGPT, even though it invented much of the underlying technology behind generative AI. Alphabet has regained momentum this year by turning its cloud business, once an also-ran, into a key growth driver, drawing in Warren Buffett's Berkshire Hathaway as an investor, and winning strong early reviews for its new Gemini 3 model. The search and ad tech giant joins an elite club of big tech companies racing to dominate the booming technology as AI continues to captivate Wall Street this year. Analysts said Google is well positioned in the AI race thanks to its strong cash flow, in-house chips that serve as an alternative to NVIDIA's pricey processors, and a sprawling internet search business that is already benefiting from AI integration.
Chinese e-commerce giant Alibaba beat analysts' estimates for quarterly revenue on Tuesday as investments in one-hour delivery helped drive more users to its shopping apps, while its cloud division reported strong growth. US-listed shares of the company rose 4% in pre-market trading. The company reported revenue of 247.8 billion yuan in the second quarter, compared with estimates of 242.6 billion yuan. Alibaba's results come against the backdrop of a costly battle in China's instant retail sector, where major players are pouring billions into one-hour delivery services to capture market share. At the same time, Alibaba has been investing heavily in artificial intelligence, emerging as one of China's leaders in the field. Recently, it launched a free app built on the latest version of its Qwen large language model, which surpassed 10 million downloads within its first week. It still has a long way to go to catch market leader ByteDance's Dubao, which has 150 million users. Alibaba's consumer-facing shift comes amid an intensifying price war in China's domestic AI market, sparked by DeepSeek's focus on low-cost computing and app development, a strategy that has forced rivals to slash prices and follow suit.
Operations at Serbia's Russian-owned Niš oil refinery have halted due to a lack of crude oil supplies, Belgrade-based Nova.rs TV reported on Tuesday, in the latest sign that US sanctions on the project could threaten fuel supplies across the Balkan country. Officials at Niš and in the Serbian government declined to comment. The US Treasury Department's Office of Foreign Assets Control placed sanctions on Russia's oil sector in January, including Niš, which is majority owned by Russia's Gazprom Neft and Gazprom. The US granted Niš repeated waivers before the sanctions finally came into effect in October. Banks then stopped processing Niš payments, and Croatia's Janaf pipeline halted crude deliveries to the refinery. Since then, Serbia has been scrambling to secure alternative fuel supplies for winter. Serbia's government on Monday said it has sufficient fuel reserves to supply the domestic market. But on Tuesday, a lack of crude meant that the refinery had stopped operating, Nova reported, meaning it will not be able to produce more products like gasoline, diesel and jet fuel. A refinery source confirmed the news. The refinery does have fuels in storage, Nova and the source said.
New car sales in Europe rose 4.9% in October as electric cars outpaced petrol and diesel registrations. Data from the European Automobile Manufacturers Association showed on Tuesday that sales in the EU, Britain and the European Free Trade Association rose to over 1 million cars. Its largest markets, including Germany and Britain, added more new cars than last year. The European car industry has taken a series of hits this year. They include US President Donald Trump's trade tariffs, a slowdown in the Chinese market, and a slower than expected transition to electric vehicles. There have also been recent worries about a potential chip supply chain crisis surrounding Dutch chipmaker Nexperia. Registrations at Volkswagen, Stellantis, rose year on year by 6.5% and 4.6% respectively, while Renault went up more than a tenth. Tesla's sales, meanwhile, dropped almost by half from a year ago, while BYD's sales jumped a near 207%. And while electrics and hybrids saw a boost, all major markets saw drops in their petrol and diesel registrations.
British carrier EasyJet reported better than expected full-year operating profit on Tuesday and upgraded its medium-term target for its holidays business after meeting the target early. European airlines have reported mixed results in the final quarters of the year as the struggle to mitigate spiralling costs and negative repercussions from air traffic control strikes continues to weigh on their balance sheets despite strong demand. Low-cost carrier EasyJet's headline operating profit for the financial year ended September grew to £703 million, above the £669.3 million projected by analysts. EasyJet Holidays, the company's high-margin package holiday arm, is now expected to log £450 million in pre-tax profit by 2030.
Meta and EssilorLuxottica's stable of smart Ray-Bans and Oakleys, which first launched in 2023, have captured the tech world's attention by answering calls, taking pictures, and playing music. The latest model, the Meta Ray-Ban display, includes a visual display in the right lens and connects users to AI. US smart glasses sales tripled year over year in 2025, according to market research firm Circana. Great news for a type of gadget that crashed and burned after Google's ill-fated glass experiment in 2013, and which has been trying to regain respect ever since. Holiday sales this season will likely dwarf the $52.6 million shoppers spent on smart glasses in the final quarter of 2024, according to Circana. Analysts expect tech companies like Apple and Samsung to release their own smart glass products soon. About 25% of respondents surveyed by Civic Science, a consumer research firm, recently said they are interested in trying smart glasses, up from 20% early this year. Smart glasses ownership now is about where smartwatches were in 2017, and interest is rising, surveys show. A spokeswoman for Meta declined to comment on how many displays have been sold or how many will be produced for the holidays. The displays, which sell for $799 before adding prescription lenses, will not be discounted for Black Friday or Cyber Monday, the spokeswoman added. Simpler and more widely available Ray-Ban Meta models, which lack a visual display, sell for $300 to $400. EssilorLuxottica said in February it had sold more than 2 million pairs of Ray-Ban Meta smart glasses since launching them in September 2023, and now says it's on track to raise production capacity to 10 million units a year by the end of 2026.
SoftBank Group said it bought American semiconductor design company Ampere Computing Holdings for $6.5 billion, completing a deal the Japanese conglomerate first announced in March. Santa Clara, California-based Ampere, which was founded in 2017, has become a wholly owned subsidiary of the Japanese company, according to an announcement on Wednesday. Shares of SoftBank closed 5.1% higher after rising as much as 8% during Tokyo trading hours. The company is still reviewing the transaction's impact on its financial results. The group's founder, Masayoshi Son, who is Japan's richest person with a net worth of $51.8 billion, has viewed the Ampere deal as an integral part of his vision to drive innovation in AI and computing. Ampere uses technologies developed by Arm Holdings, a British semiconductor design firm majority owned by SoftBank. In November, SoftBank announced that it had offloaded the company's entire stake in chipmaker Nvidia for $5.8 billion. The proceeds from the divestment comes handy as the Japanese conglomerate seeks additional financing for its massive investment in ChatGPT owner OpenAI. SoftBank has committed to invest $30 billion in the firm.
India's Russian oil imports are set to hit their lowest level in at least 3 years in December. That's according to trade and refining sources cited by Reuters. It would be down from multi-month highs seen in November. The sources said it's due to refiners turning to alternatives to avoid breaching Western sanctions. Britain, the EU and the US have tightened sanctions on Moscow over the war in Ukraine. Washington's latest measures targeted top Russian producers Rosneft and Lukoil. Buyers of Russian oil had until November 21st to wind down dealings with the two firms. Separately, the EU has set a January 21st deadline, after which it will decline fuel from refineries that handled Russian crude within 60 days of the bill of lading. One source said that bank scrutiny following the latest US sanctions has made Indian state refiners extremely cautious, adding that India is likely to get 600 to 650,000 barrels per day of Russian oil in December. Most Indian refiners have stopped buying Russian oil. India is also under pressure to buy more US energy after Washington doubled tariffs on Indian imports to 50%, citing New Delhi's buying of Russian oil.
Alphabet's autonomous vehicle unit, Waymo, rolled out its freeway robo-taxi service on Wednesday in Los Angeles, San Francisco and Phoenix, marking its first paid rides on high-speed roads. Waymo, which already operates in parts of the San Francisco Bay Area, is also expanding to San Jose, including Mineta San Jose International Airport, its second airport service after Phoenix Sky Harbor. Waymo's communications department said the service stretches all the way from Santa Monica to downtown LA. To address the added risks of high-speed driving, Waymo developed new freeway-specific protocols in coordination with local highway patrols and safety agencies. Its autonomous system includes redundant safety measures designed to maintain control even if one component fails. Freeway service will begin with a limited group of early access users, with availability expanding over time as Waymo monitors performance and rider feedback. As the US robo-taxi market heats up, Waymo's freeway launch underscores how the company is striving to differentiate its offering through full autonomy, broader coverage, and faster point-to-point travel.
China's Great Wall Motor is targeting annual production of 300,000 vehicles by 2029 in Europe, where it is scouting locations for its first car plant in a battle to revive flagging regional sales, a company executive said. GWM teams are scouting sites for the factory in Spain and Hungary, among other countries, President of GWM International told Reuters. Labour and logistics costs are among the myriad considerations complicating the choice of location, as GWM will initially need to ship components to the target market for assembly. The automaker is also monitoring the European Union's industrial policies, with an eye to changes in the investment climate and custom duties. Chinese automakers are increasingly looking to expand overseas as a way of escaping a brutal, prolonged price war touched off by domestic overcapacity. However, their efforts to boost sales in Europe and other major auto markets have met with higher tariffs on electric vehicles, where Chinese brands are most competitive. In Europe specifically, GWM needs to wrest market share from entrenched incumbents as well as aggressive Chinese rivals, such as BYD. Reuters has reported that BYD considers Spain the top candidate for a third European plant, besides manufacturing facilities in Hungary and Turkey. GWM currently operates overseas plants in Russia, Thailand and Brazil. The company aims to appeal to mainstream consumers in Europe with new models such as a multi-powertrain version of the Aura 5 compact SUV that it plans to launch in mid-2026.
Stellantis chairman John Elkann warned the European auto industry risks an irreversible decline if the European Union does not soften its stance on cuts in carbon emissions to grant automakers more flexibility. The European Commission is due to present a package of proposals for its scheduled review of EU carbon emissions regulation for the auto industry on December 10th. Elkann said the auto industry had drawn up a package of proposals to give automakers more flexibility on emissions targets and that this would allow the sector to avoid the feared decline. Proposals from the industry include allowing plug-in hybrids, range extenders and alternative fuels beyond 2035, averaging 2030's interim carbon reduction goals over several years, introducing a wide vehicle scrappage scheme and adapting regulation to favour small car production.
A-Ridge, the flying car subsidiary of Chinese electric vehicle maker XPeng, is testing the automated equipment at its factory that will one day mass produce its land aircraft carrier flying car. A-Ridge's product includes a vehicle that carries an eVTOL, or electric vertical takeoff and landing vessel. The factory in South China's Guangdong province will mass produce the eVTOL portion of the product with capacity to make 10,000 modules per year. A-Ridge says once it's fully operational, the factory will be capable of assembling one aircraft every 30 minutes. The company is now awaiting clearance for the various certificates that must be in order before mass production can take place. The first is the type certification, which the company expects to obtain before the end of the year.
Well, this week's analysis wraps up here following a series of reports on the pressures, opportunities and policy signals directing the global economy. We'll keep watching how these shifts unfold. Thank you for joining us, and we'll return with further insight next time.